Good morning, everybody. It's Friday, September 27th, 5:29 a.m. Central Time. Grain markets are mixed this morning. Brian Split is here. Guys, let's start off with yesterday's price action in the row crop markets.
So, soybean futures posted fresh highs on Thursday prior to a lower close. The most heavily traded November 24 contract peaked near 1065 per bushel prior to closing near 1041. Early session optimism regarding additional Chinese stimulus perhaps gave way to hedge pressure late in the session. Corn futures also posted fresh highs prior to a lower close. The December 24 contract peaked near 419. Today, position squaring is a possibility ahead of Monday's USDA grain stocks report.
Brian, I guess you can call this a reversal to the downside in soybeans yesterday, but we still got what looks to be some sort of uptrend in place that has really been in place since the mid-August lows.
Yeah, I really like your chart here. It's a nice channel. It
Thank
just
you.
really
Appreciate
shows that that the market, has a little bit of room to go if it wanted to revisit the uptrend. I think we talked about that little pocket on Wednesday as far as a possible downside level to test to solidify the trend if it holds. But we've got some other patterns within the pattern, and we just broke out of what I would call a bull flag, and it still projects higher. It doesn't have to. We're going to get another data set on Monday that could, really just nullify any chart patterns depending on what type of numbers we get. But that's what we're working with right now.
When Brian tells you have a good chart, it's like when Tiger Woods tells you, hey, nice swing, kid.
Yeah.
Like that.
Thanks.
Corn, you've got a similar, uptrend. It doesn't maybe look as great, but it's going in the right direction generally.
Yeah, and we just made a new high for the move yesterday, so the market is still advancing. We haven't been really able to hold on to some of these gains for the close. We've actually yet to close over that September 6th high of 416. We've traded through it a little bit, but we haven't closed above it. But I did point out on Wednesday's premium video, there's some. You look at like the March and the D's 25, and there's some head and shoulder bottom type looks to some of those charts. So it probably requires a number on Monday to validate it to get through the neckline of these patterns. We haven't done that yet, but the potential setup is there.
We did make a higher high yesterday. Higher highs are good, right? Even though we couldn't hold it, still not a bad sign. Let's jump to this China news, the most recent update anyways.
The US Treasury's top international official believes China needs to do more to stimulate its economy. Shambaugh believes China's growth concerns remain unaddressed even after the country cut interest rates and implemented other measures earlier this week. In an interview with Bloomberg, Shambaugh said strengthening pensions for rural Chinese residents would boost consumption and improve social environment would also increase domestic demand. According to Shambaugh, China's savings rate is extremely high, resulting in an economic imbalance with mass production of goods and insufficient domestic demand. Overnight, the Chinese government confirmed some of the additional stimulus that was rumored yesterday.
So I guess that this additional stuff that was confirmed overnight was mostly priced in yesterday. You had your stock market rally yesterday. You had your initial soybean rally yesterday. Supposedly, they're going to maybe even do a few more things before they go on a week-long holiday on October 1st. Brian, how much of the strength in the soybean market has to do with this?
I think it's one of the elements this week, and if you kind of notice the price pattern of what we've been doing, it's like there was a big day of buying on Monday, and we didn't really know why. We knew that there was an element of some hot and dry in Brazil that's been ongoing, and that's still a concern of the market. But up 30 cents on a Monday when it was called to open steady to lower on Sunday night was a big surprise, and so I think there was a in the know personnel that were buying it on Monday. Then on Tuesday we got the news, and then it backed off, and then there was some more stimulus, so there was more buying, and then we got the news and it backed off. So it's been a little bit of a buy the rumor, sell the fact back and forth here a couple times this week. So I definitely think that Chinese stimulus, obviously soybeans are very sensitive to China policy. They're a very large buyer of soybeans, obviously. So that's gotten the market going. And I think this is probably at least half of what we've been seeing this week. And again, the dryness in Brazil being the other half of the narrative.
The other way to think of this is that China's in really, really bad shape.
Right.
That they're taking so much action, and that maybe this like big picture when you step back speaks to the idea of just that their economy is in really bad shape. Some people are comparing China's situation now to like 2008, like their property situation is that bad.
Yeah, right. So that's what the market's trying to figure out is,
Right.
okay, so stimulus is good. Does this make them buy more beans? I don't know. I mean, a lot of
Yeah.
this has to do with their property situation. A lot of the stimulus they did was, hey, for your second home, we're going to reduce the percentage of down payment that's required. So they're trying to stimulate the property market. Does that get people to buy more beans? I don't know that those two are correlated, but it's more of a sentiment thing, right?
Yeah, for
But
sure.
yes, if China's doing this and all taking all these measures, that means it's really not a good scenario over there.
No, it's not. It's not at all. Okay, as we alluded to, we do have a big report on Monday.
We sure do. USDA will release its quarterly grain stocks report on Monday. September 1st, stocks of corn, soybeans, and wheat are likely to be drastically higher versus the same period last year. Traders estimate that U.S. corn stocks as of September 1st were 36% higher than a year ago. Soybean stocks are estimated to have increased 32% versus the same period last year, while wheat stocks likely rose 12%. There is some slight variation between the pre-report estimates and USDA's most recent estimate of the old crop corn and soybean carryouts.
In terms of methodology, how are these numbers compiled? The grain stocks estimate in this report are based off surveys conducted during the first 2 weeks of September. Separate surveys are conducted to obtain the on-farm and off-farm estimates. The on-farm stock survey is a probability survey that includes a sample of approximately, this was last year, 56,000 farmers selected from a list of producers that ensures all operations in the U.S. have a chance to be selected. So it's a survey-based deal. There's always volatility risk when it comes to these stocks numbers, Brian. They're unpredictable.
They are, and you could go back over the years on these stocks numbers, whether it's the September stocks number or any of the other three. And it's not uncommon to find or lose. And when I say find or lose, relative to the average guess, 100 or 200 million bushels in corn.
Right.
And if you do that, that's going to be a pretty large awakening moment for the market in either direction. So it's very hard to handicap this type of report. You could try to, justify, well, why could we find more corn? And just from the commercial guys that we talked to and what we've been hearing about the amounts of old crop that have just been getting spotted, as they deliver it, there's a lot of old crop out there. Is it more than the last USDA estimate that we had on the September WASD report? We'll find out, but there's going to be some volatility from this report.
Yeah, they actually Reuters put out trade estimates for 2023 corn and soybean production because that's where you could see an adjustment that would result in stocks going one way or the other. And they're not looking for any big change or anything like that, but that's where you could see something change, I suppose. I don't know, but these are just you want to know why the markets are as bad as they've been. Big picture, I know we got some recent strength, but I mean those percent increases year over year, 36% in corn stocks, 32% soybean stocks. I mean, that's the reason why the markets are no good.
Yeah, and I guess this is the number. This number right here is what the USDA has been estimating for a long time. What, a year, since May of 2023, right? And so this is our carryout number or carry in into the new crop. And then when you not only look at this number, but then what we're projected to have for our 24 carryouts, right? All of these numbers go up again.
Yep. Yeah, just keep going. It's not good. Okay, Russia.
Alrighty, estimates for Russia's wheat crop have been cut. Russia's ICAR agricultural consultancy reduced its estimate to 81.8 million metric tons, down from its previous projection of 82.2 million metric tons. The firm also reduced its estimate for Russia's total grain production to 124.5 million metric tons, down slightly from 125 million metric tons. The cuts were due to excessive rainfall across eastern regions of Russia in recent months. Additional cuts may be necessary, as Sovicon announced earlier this week that winter wheat planting had dropped to its lowest level since 2013 due to dry conditions.
This says 2024, but I think this is 24-25 marketing year because last year's crop was like 91 million. In any case, ICAR is at 81.8. That's a very small downward revision. USDA is at 83, I think. But they're going to be down year over year. The Black Sea is hugely important when it comes to wheat, and they've got drought issues in both Russia and Ukraine. Brian, I'm actually a little surprised that maybe the wheat market isn't acting slightly better. We've seen much better export sales out of the U.S., and we've got weather issues in the biggest bread basket of the world, if you want to call it that.
Good export sales for us until yesterday. Yesterday kind of stunk, but
Yeah.
yeah, the global stocks for wheat. When we look at the global stocks and stocks to use for corn, for soybeans, and for wheat, the wheat market has really the best, friendliest global scenario.
It does.
And then when you take a look at, like you said, these two main growing regions in the Black Sea, Ukraine and Russia specifically, there are weather concerns. I think it's another deal where the market has bitten off quite a bit here in the last month or so off the lows. And because we have this report next week, it's probably pumping its brakes a little bit. Chicago wheat in December above $6 would be a major advancement. So that's the key area that we're going to be watching here next week, is whether these stocks numbers on a quarterly basis can push Chicago wheat through 6. And if it does, then that's going to be something that will likely help corn move higher as well.
All right. We did have an export sales report yesterday.
New crop U.S. corn export sales were soft last week. Net corn sales fell below pre-report estimates at 21 million bushels. The print was down 37% compared to the prior week, and Colombia was the largest buyer for the week. Net soybean sales were near the upper end of expectations at 58 million bushels. The print was down 10% versus the previous week, and China was the largest buyer for the week. Net wheat sales fell below pre-report expectations and notched a marketing year low at 9 million bushels. The print was down 36% from the previous week and down 60% from the prior 4-week average. Chile was the largest wheat buyer for the week.
Despite some poor weeks in corn and wheat, we are still very much on track to hit or even exceed USDA projections. I know it's really early in the corn marketing year, and it's still early-ish for wheat. Soybeans are the problem. That was a really good week, though. We've now got the third worst book of soybean sales of the last 10 years and not the second worst. So golf clap for that. But if you were to do any sort of pace analysis, Brian, and it's very early to do so, we're not on pace to hit USDA projections for soybean exports.
No, we're not. But the last 2 months has been pretty solid. And we've racked up quite a bit in a short period of time. And I think the sales last week that we just showed there for soybeans, that was a top 5 total for that particular week in history. Yep. So, the Chinese have definitely kind of changed their buying pattern. They were just absent for so long. And it's just a product of how the Brazilian crop allows them to do that as that Brazilian crop gets bigger. So then, when we think forward about the size of the upcoming Brazilian crop, we may be seeing the same story all over again next year, where we're looking at pace analysis saying, all right, we're not doing very good because the Chinese are buying Brazilian soybeans. And if the Brazilian crop is 165 next year instead of 150, that buying may not start in mid-July. Maybe it doesn't start until, August or September next year, if that's the case.
Yeah, the book of export sales for soybeans out of the U.S. is almost identical to where it was last year, and USDA's got this increase projected, which doesn't really line up right now. But a lot of it'll hinge on South American weather. We didn't do Brazil weather today, but there are supposed to be some rains in Mato Grosso and elsewhere coming this weekend, so we'll see how that stuff performs.
USDA released weekly drought monitor data yesterday. Rainfall was scattered across the Corn Belt last week. We saw drought conditions improve in Missouri and Illinois, while conditions deteriorated in Ohio, Minnesota, Nebraska, and Kentucky. Ohio continues to have the most severe drought conditions with a topsoil moisture rating of 95% very short to short. Indiana and Kentucky follow with 79% and 77% respectively, with the exception of Kansas, where rainfall eased drought conditions across the state. The majority of the High Plains observed unchanged or worsening drought conditions last week. When we look at the percentage of U.S. areas experiencing drought, corn country 25%, soybeans 30%, winter wheat 50%, spring wheat 18%, and cattle country 32%.
Brian, have you heard any yield reports out of these dry areas of Ohio and Indiana, places like that?
Not in that southeast pocket of Ohio where it's the worst, but I don't know that that's a very high production region in the first place. But it is spreading further west and a little bit further north in the state. I've got some producers in Ohio, but they're actually in that northern to northwest corner. So their crop is actually pretty good. They were just fortunate enough to be in a spot that got some rains when it came through instead of missing it. And their yields are pretty phenomenal, at least on the early portion of their crop. They are somewhat concerned about, if it's going to hold together for the later planted stuff. But I don't have anybody in that pocket that's showing extreme, dark red.
Some other U.S. weather stuff this morning. So tropical storm Helene was a hurricane. They downgraded it to a tropical storm. It's dumping a whole bunch of rain in the southeast. I don't know if you guys can hear it in your headphones. It is pissing down rain where I live here in Middle Tennessee. So there's going to be a lot of rain. This is more of, Brian, we talked about this, cotton crop maybe in the southeast could have some problems. I don't know if this is going to do a whole lot to really slow down row crop harvest maybe in some areas for a little bit.
Yeah, I think a lot of the row crop stuff has already been harvested.
Sure.
So the harvest percentage there probably won't be a major concern. But yes, cotton's going to be a concern. And if you were to overlay a map of cotton production versus where the storm is, so that little everything over Georgia is going to be a concern. And then when you look at where southern Illinois into that little pocket there into Kentucky, there's a lot of production there that could potentially be affected. So it was interesting when you think about that last hurricane that went through, what was that, around like September 10th or 13th in that time frame. The hurricane came and the market like firmed up a little bit in cotton, but it didn't do a whole lot. And then coming out of the weekend after the hurricane had already come through, that Monday, cotton was limit up. So it'll be interesting to see what the reaction is out of the weekend for cotton. Maybe not so much today, but how they traded on Monday. And it's going to be also, you got that quarterly stocks report on Monday. So that adds another element to them trading that storm.
River levels are projected to rise fairly substantially here over the next week. By October 5th, we're going to be back to like normal, to actually a little bit above normal at Memphis, which is very much a positive because we need to be shipping soybeans very, very shortly here.
We had a flash sale of corn yesterday. U.S. exporters sold 5 million bushels of corn to Mexico for delivery during the current marketing year. Mexico will likely be the top buyer of U.S. corn once again this season.
Yeah, Brian, is there any reason to believe that Mexico won't be the biggest buyer of corn? The only way that doesn't happen is if China does something that nobody's expecting.
I think status quo is going to be that Mexico is going to continue to be our best corn customer. And likely what we will see, and I think we typically see this sometime in that October to November timeframe every year, there's going to be a very large purchase from Mexico. It'll probably be about 2 million tons.
Yep.
And then after that purchase, we may start to see the general export pace soften up quite a bit until we get to the bigger picture time frame for corn exports, which is really export season for corns more next spring as the bean export market slows down.
What did cattle futures do yesterday?
They were higher. Live cattle were up 15 cents to $1.05 higher. Feeders were up 2 cents to 92 cents higher. Box beef continued to erode. Choice ended the day at $296.37. That was down $1.80. Select ended the day at $282.37. That was down 91 cents.
Quick cattle market thoughts, Brian?
Looks good. The charts looked bad early in the month. They've recovered. We had a little double bottom where basically our October low and our August lows held at the same spot. There was a high that was made in between those two lows. We got through those highs. And so December cattle, for example, I believe that measurement projects up to like 180, 85.70 or 85.80 as far as upside measurement. So cash is hanging out at levels that the board is come back to. So it looks like the board and the cash are finally again back together. And there was a good stick save here by the chart, because if we were still trading below 180 here late in the month, it wouldn't look real good.
Outside markets are very quiet this morning, guys. Not much to speak of there. Everyone have a wonderful weekend. Brian, thanks for joining us. We'll be back on Monday.